This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Thank you for joining us. I'm Gord Long. I have Miss Shedlock of Sitka Pacific Capital and well known from MISH'S with us again today. Welcome back, Mish.
Pleasure to be back on, Gordon.
Quickly, the time goes, and an awful lot of developments since we last talked. Specifically, we have a new president-elect in Donald Trump. You've been writing extensively on it. I'd really like to run through some subject areas on it, kind of recapping some of your writings, but some of your positions or thinking. We have a very significant report coming out at MATA SII on investing in Trumponomics, and just get some of your feedback and whether we're on track with some of our premises on it. But what are your expectations right now, Mish, for a Trump presidency?
Well, it's kind of weird. All the people that are now telling us what the election means, why Trump won, are the same people that got it wrong. Now, back in April, I thought Trump was going to win it all. But after the first debate, which was a horror for Trump, I actually thought he was going to lose. I mean, he just plunged so dramatically in the polls. Fortunately for him, this FBI Comey thing came out. I think that changed some sentiment. We also saw some traditional Republicans coming back home and just voting for him for the simple reason they couldn't stand Hillary. So the other key thing that happened is the millennials were excited over Bernie. I think a lot of them just did not vote. They sat this thing out. I talked to some of them ahead of the election, and that's what they told me. They weren't even going to bother voting. They didn't like either of them, and that came into play too. So now here we are. Everyone's telling us, well, the Trump means certain inflation, that he's going to do all these massive infrastructure projects. And the weird thing about some of those is we've got economist Paul Krugman now looking at what he's doing and looking at the quality of what he's doing and saying it's wrong. Now, this is coming from a guy, Gordon, that said that we should pretend there's a space alien invasion and build a defense shield against it, essentially wasting money, and that would save the global economy. Now all of a sudden he's looking at what Trump wants to do and says, this really isn't good enough. I've not even written about that yet, but that's coming up. So first off, I don't think we're going to see all this infrastructure, at least in a hurry, that Trump is saying. We've seen a big reaction from the U.S. dollar. I think that's going to hurt U.S. exports. It's going to make imports cheaper, however. But the big thing that I think people are not factoring in here realistically has nothing to do with Trump, but just a change in attitudes globally about globalization. Trump is going to start a trade war with China. It's pretty clear. He's going to label China a currency manipulator. It's really not much different than what Hillary was saying. He just said it in a little bit harsher language. We've already seen Brexit. The EU just came out with more demands on the UK, including straightening out Gibraltar and Northern Ireland. Yeah, that's going to happen. So regardless of what Trump does or doesn't do, there's some pretty severe deflationary undercurrents in the global economy right now, and a collapse in global trade is a very real threat. But back to Trump, I'm already disappointed in some of the people that he's looking at for appointments. He criticized Hillary for picking Goldman Sachs candidates. Well, guess who's on his list? So that's a big disappointment. but there are some changes. He wants Europe to pay more of its share of defense. He's not changed his position on NATO. He's adamant that he's going to build this wall. That's something I didn't think was going to happen. I still don't think he can get funding for it. However, Rudy Giuliani came out last week and he said Trump doesn't need funding for it. He can essentially steal it from elsewhere. Budget. Now, if that's true, we very well might see a wall, but Mexico sure isn't going to build it. But I think a lot of things have happened here. The dollar's ahead of itself. Treasury yields are ahead of themselves. They're pricing in this massive inflation here that I don't think we're going to see. At least in the short term, I think there's another deflationary scare coming up first because of a global trade bust.
That would suggest, and I'm with you on the movement in the bonds, a 10-year from 1.8 up to 2.25, 30-year busting 3%. These are massive upward moves in yield, downward moves in price. And if we get, as soon as we get a little whiff of deflation, there's some big moves here. Up in price, down in yield. And so these gyrations are destabilizing because you get margin calls, not in the equity market, and it flows over to the equity market.
Well, the big margin call is going to be in housing. Interest rates have risen 40 basis points, 0.4%, since Trump won the election. That was, I didn't look today, that was as of a couple of days ago. Since the beginning of October, they've risen something like 70 basis points. Don't have the exact number. And I think there was a sell-off in bonds today, so it's more likely 80. So already we've seen mortgage rates tick 0.6% higher. That's going to kill instantly the refi market. And we saw some pretty unbelievable housing numbers out today, actually. I just let it slide. Let's see if these things are adjusted down. But the two key things that have been keeping this economy going have been housing, number one, and even more than that, actually housing number two, auto sales. And I did some posts the other day, some charts, and I looked at manufacturing, flat. I looked at manufacturing of autos and automobile parts. The chart is going through the freaking roof. So manufacturing being flat and took a big piece of that just to get flat, needed all that from autos. I just don't see autos, holding up. But you know what, Gordon? I've said this for a year, and here we are. Sales are down a little bit from last year, but they're still relatively strong. But what pent-up demand is there for housing? Especially with rising mortgage rates, what pent-up demand is there for cars? That's what's been driving the economy. Throw in a global trade collapse, and where are you headed?
Well, actually, the auto industry right now, resale values are falling. They can't move the inventory. Ford's cutting back, taking back second shifts, et cetera. So we're seeing a fair bit of scaling back in the auto industry overall.
I think so, but we're not there yet. We're not to the point where it's killed manufacturing. Actually, the Philadelphia Fed region index turns up. This is what happens though when indexes are down so long. Year-over-year comparisons become extremely easy. We've seen these kinds of upticks before though, and they've not lasted. Maybe we're seeing an uptick here, but we're also seeing some downward pressure in services. Service prices are actually starting to fall. The service economy goes, it's going to take the rest of the economy with it. And I just can't help but not keep coming back to this global trade idea. Now, if I'm wrong, if there's not this collapse in global trade that I suspect, maybe this lasts for another 6 months or a year. We'll see. But we've got a lot of bad forces here. deflationary pressures coming out of China, a rising U.S. dollar, a collapse in global trade, protectionism. We've got important elections coming up in Europe. We wonder if they even survive, if Merkel even survives some of those. So the global macro picture to me looks pretty awful.
The back to Trump's policies. Do you see him repealing any part of Dodd-Frank, attacking that, or other pullbacks and other regulatories to make this more pro-growth? And also, just a follow-up to that, his tax cuts that he's promised or has said he's going to deliver, are these legitimate?
I think the tax cuts are legitimate and they're a good idea. And maybe some of the tax cuts actually do pay for themselves. Depends on what they do and how they're structured. But we hear changes on that every day. The infrastructure spending, I think, is going to come in slower. Saw a report on Zero Hedge today where someone did a budget analysis. He's going to add $12 billion to the deficit over the next, I think it was decade. That's a lot. Well, that's $1 trillion a year. Is that believable? Actually, it is. And the weird thing about this is I think it would have happened under Hillary as well, despite what they say. And on top of that, no one's priced in a recession. So it could be a lot worse than that. But we'll see. I mean, he's promised these deals with Mexico, with China, with Iran. They're all very destabilizing, if you ask me. Each one of those is destabilizing. And Australia backed out of TPP. That's the Obama's Trans-Pacific Partnership. Instead, it's going to join a trade consortium led by China. The irony on this one was Obama excluded China. They're the third biggest economy, second unless you count the EU as a single bloc, third if you do. He excludes China from a Trans-Pacific trade partnership. Now, how much sense does that make? So that's a deal that's collapsing. It would have collapsed under Hillary, at least if you believe her. Maybe she lied. Who knows? But all these signals are out there, and the market is only focused on one of them. And that is, if Trump labels China a currency manipulator, import prices are likely to soar, and that's going to cause inflation. Okay. Yes, on the surface, that's going to cause prices to go up. However, is that it's also going to massively slow growth. So here we have rising prices, slowing growth, and the Fed hell-bent on hiking into it. Now, I'm not saying the Fed shouldn't hike here, Gordon. We've had this conversation before. Actually, I don't know where interest rates should be, and neither does the Fed, and neither does anyone else. Only the free market knows where the interest rates should be. And Lord knows, we have not had that, actually, a free market in interest rates forever. And the Fed has blown repetitive bubbles after bubble after bubble because it's always chasing its tail. And so I'm looking at this and saying, well, here we are. We're ready to go again. And the Fed has very asymmetric policy. It ignores every asset bubble as it's building, but never misses a beat when those asset bubbles plunge. So, and I think we're on the verge of another deflationary bust here. We'll see whether trade tips the scale, whether a rising dollar tips the scale, whether protectionism tips the scale, or simply rising interest rates and Fed hikes tips the scale. But there's a lot of things priced in here to the stock market that we're going to have all of this, quote, good inflation thanks to Trump. Well, we'll see. We'll see.
Well, it's destabilizing a lot of things. And for example, with the yields going up so high, it put the Kurodas, the Japanese monetary policy in failure mode right now. They're having to react because, as you know, they're managing the yield curve. At least that's a new program. And with the 10-year moving up, Crota's had to throw in the towel on it to move aggressively. These are the kinds of gyrations that we're seeing coming in. Do you see changes in monetary policy occurring?
Well, one of the things we've seen recently, and people get this wrong, they say, and I've been meaning to do a post on this, and I will. China is dumping U.S. Treasuries. Well, effectively, well, sort of in a way they are, but China is dumping treasuries to defend the yuan, actually. So people say, well, another devaluation in the yuan is coming up. I agree. China's acting to try and stop that. It's trying to act to suppress capital flight from China, which is massive. So dumping treasuries isn't precisely the right word here. They're not dumping them as in we need to get rid of them. You know, we think the U.S. is going to hell. They're dumping them to protect, to stop a crash in the yuan. Yet the yuan's crashing anyway.
Yeah, I don't think people realize the hidden story that's going on as we talk is the seriousness of the erosion of the renminbi, of the yuan. It is just being, I use your word, collapse.
Absolutely. And Trump's going to look at that and say, see, China's manipulating its currency. It's actually trying to strengthen the yuan and has failed. That's what's going on. That's what few people realize, Gordon.
No, that's exactly our conclusion too, and we think there's been and continues to be some real opportunities because everybody's kind of focused on maybe some of the wrong areas, and that's one of them right now, which has profound impact. Obviously, we have to wrap. Mish, any final conclusions or comments you'd like to make?
No, I think we need to wait and see. Yeah, I'll offer a final comment. I thought we were headed for a recession this year. Looking at the latest reports, of course, they can always be revised away and massively. But the latest housing numbers, the latest forecast, looks like we flirted with another recession, didn't hit it. Now, one's coming anyway, regardless of what the Fed does, simply because of the global deflationary and asset bubble pressures. But the Fed might, and I've said this before, might very well, get its hikes in right as the recession's starting. Now, it is going to hike in December. That's for sure. Yellen all but said that, and for a change, the market agrees. Now, it's agreed before, but there was always too much time between market agreement and a Fed meeting that things happened in between, and the Fed didn't hike. Now we're going to see this hike in December, and we'll see how the dollar reacts to that, how the euro reacts to that. But it's just adding to these pressures that I don't think are good, and it's clobbering emerging markets. So there's Fed policy, either way, central bank policy, not just Fed policy, has so massively distorted the system. We've got no real pricing mechanism in anything. To an extent, we're all guessing because of that. We're all guessing. I'm guessing when I say that. But people act, the bullish case coming out of mainstream media is there aren't any problems. Everything is great. Trump's going to have inflation. The Fed's going to hike interest rates, and more importantly, they all believe the Fed and central banks have defeated the recession cycle. Well, they haven't, and the bigger these bubbles blow, the harder the fall, the bigger the deflationary bust coming up. So I don't know when. I keep thinking it's right. The market keeps having other ideas. But it's coming, Gordon. It's coming.
We've never stopped the business cycle. Maybe it's deferring a little bit, but we will have a recession. And I don't know if we're prepared for it because, as you correctly point out, and I agree with you, Mish, we have lost the mechanism of price discovery. And therefore, we've had dramatic misallocation of capital. And that'll show up when we do finally see that recession, whenever it does arrive. And I'm with you. I've been waiting for it imminently, and everything suggests it's very close. But who knows that one for sure. Mish, have to wrap. Always enjoy the discussions, and we'll have lots more to talk about next month. Maybe all of Trump's cabinet will be in place, and we can talk about some of that.
Excellent. I look forward to catching you in a month.
Talk to you then. Thanks, Mish.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.